Good evening, everyone. Once again, I'm Rakhi Gautam from greytHR, the moderator for the session today. I welcome you all today to our 65th Ask the Expert webinar, Parichay. The topic for today is investment proof submission. I'm sure you all are very curious to know all about it. Now, before I dive into the topic, let's do a little housekeeping on how the session goes. So the session is divided into two parts. The first part will be the discussion with our expert, which will then be followed by an audience Q&A. So if you have any questions, you can start putting those questions right now in the option that that is available on your screen, and we will take that up towards the end. Also, the session is currently being recorded. So if you happen to miss out on anything, do not worry at all. We have got you covered. We will share the recording with you once it is done. And also, this session will be available on our official greytHR YouTube channel. So you can always go there and watch it. Now, without any further delay, let's start the discussion. In this dynamic session today, we have with us CA Ruchika Bhagat, Managing Director, Brooks Consulting Private Limited, to guide us through the intricacies of investment proof submission, an essential aspect of optimizing our tax planning. We will delve into the HR guidelines and best practices for complying with tax regulations, ensuring that you not only save on taxes, but also manage your finances efficiently. Now, let me quickly take you all through our speaker's profile. CA Ruchika Bhagat is currently, as I mentioned, is the Managing Director of Brooks Consulting Private Limited, which is a payroll and HR consulting firm. She graduated from the University of Delhi in 1996. She became a member of the Institute of Chartered Accountants of India in 1998. She's a strategic advisor in setting up businesses in India for foreign companies and taking care of its compliances. She specializes in business advisory, tax, regulatory, and risk advisory. She is a business professional with more than 24 years of rich experience helping other businesses grow and be more profitable. Once again, we welcome you, Ruchika. We're very excited for the discussion today.
Thank you, Rakhi. Thanks a lot for the nice introduction.
All yours. Okay. Now, I think we can start with the basics first because, as we are saying, this is going to be on proof of investment. If you can explain the key tax saving investment options which are there available in India and the documentation required to claim deductions for each of them.
Rakhi, before discussing all these investment part, as we all know, we have basically two tax regime. One is old tax regime, another is new tax regime. So under new tax regime, first of all, we don't have any tax benefit on the investment made. So what all investment, in case if you are making any investment for your tax saving purpose, then I don't think you are going to get actual benefit from it. But when we talk about the old tax regime, yes, you are going to get the benefit for all the investments that you make under Section 80. So as I can say, Section 80C to 80U, basically these are the sections under which the individual are covered, and they can invest in certain investments through which they can get this tax benefit. And when I discuss all these investments, like what all are under 80C, so to begin with Section 80C first, it has endless list of investments where you invest and then you will get the deduction. But again, the maximum threshold limit is rupees 1,50,000 only. And then extra you have rupees 50,000. Total make is to be rupees 2 lakh, provided you invest in NPS only. So this entire, I think 1 hour of webinar will be short to discuss all these deductions. But what I can do is I can discuss some of the investments in detail, which are very famous and which are normally familiar to the people. And if in case they have any confusion regarding these investments, anytime they can ask me in between or later on. So to begin with, first of all is PPF. So PPF is the most common investment that each and every individual is very familiar with. So in PPF, you can deposit the amount, not only for yourself, you can also deposit the amount for your spouse. You can also deposit your amount for the children. Again, the threshold limit is rupees 1,50,000, but the best part is that any interest on PPF is totally exempt. You need to have as an investment proof, you need to have the passbook of the PPF with you, have how much investment you have made. Then after PPF, we can also discuss about the equity linked savings scheme. Why I have taken this investment is basically normally most of the people, they are, apart from what all they are earning as a job or as a consultancy, whatsoever they are doing. But apart from that, they're also investing in mutual funds, SIPs. So if you have invested in equity linked savings schemes, then also you will get a deduction under section 80C. As I have said earlier also, and I'm repeating again, the threshold limit will be always remain same, that is 1,50,000. So this basically ELSS has a mandatory lock-in period for 3 years. Here there is one challenge that you cannot invest in ELSS scheme for your wife or your children or any other dependent relative. So it is, if you invest for yourself only, in your name only, then only you are going to get the deduction, even though your wife or your children, they are the first shareholders of the investment. Then coming forward, next investment that we can do is fixed deposits. So if you have any fixed deposits, if you have invested in fixed deposits with scheduled bank or any other bank, then also you can get the deduction. Again, the condition here is there is a time limit, that is fixed deposit should be of 5 years, and this fixed deposit should be specifically for tax saving purpose. So if you have invested in FD, threshold limit will remain same, but you will get the deduction under section 80C. Then further, when I say Sukanya Samriddhi Yojana, you can also invest in that. As the name itself signifies, this is for the girl child. So if in case you have girl child, then for 2 girl children, you can invest this, and the minimum investment amount here is rupees 250. So that is very nominal amount to which you can invest in this. This can be made through cash. This investment can be made through check also, or online transfer can also be done. Maturity period in case of Sukanya Samriddhi Yojana is normally for 21 years. But if the girl child is getting married at the age of 18 or 20 or something like that, then also after the age of 18, you can mature this fund and you can get the amount. Then the most important investment, as I said, in entire 80C, the deduction is of rupees 1,50,000, but you get additional amount of rupees 50,000 for NPS. So if employee is investing in NPS, then he'll be getting a deduction of rupees 1,50,000 under section 80CCD1, where he can contribute up to the 10% of his salary, that is basic pay and DA. But if he is investing in 80CCD1B, then in that case, he will get additional 50,000. So in total, the contribution can be made up to rupees 2 lakh, and he can get the deduction of rupees 2 lakh under 80C if he invests in NPS. Here, the lacuna is that if you are HUF or any person who holds OCI card, he cannot invest in National Savings Scheme. He can invest, but basically he will not get the tax benefit NPS. So basically these are some common investments where a person can invest and can get the tax benefits. Apart from this, there are so many other investments, like you can invest in NSCs, you can go for home loan, you can buy ULIPs, but we'll be discussing all these investments later on in future questions.
Thank you so much, Ruchika, for setting the context. I think that was a lot to take in, but thank you for taking us through each one of them. I saw a question. We will take questions again towards the end, but yes, you can keep adding your questions here. Now, my next question would be, because you talked about the old and new tax regime, there are, a lot of things that needs to be, considered when we are switching the job, when it comes to tax saving options or other documents which are there. So if you can please, take us through that, that would really help.
Well, this is very good question. And in fact, I think answer to this question will be beneficial to many of the employees, because in my practice only, I have seen many employees who never give the declaration to their new employer about their old employee salary, what all they were trying earlier, what all investments they have made earlier, what all TDS has been deducted earlier. And it creates a lot of confusion. And what happens is your current employer, that is new employer, he normally charges TDS on the salary, what all he is paying. He totally forgets about what all salary he was, you were earlier drawing, because you never declared that salary to him. So this, it puts to the lot of legal compliances, and which the assessee fails to do. And ultimately it hampers his legal obligation, and ultimately he end up paying more taxes and he end up paying more interest. So to avoid all this confusion, what I normally suggest is that you should give a declaration to your new employer about the salary that you were getting earlier, about the breakup of that salary, about the TDS that has already been deducted, and most importantly, about the investment that you have made. And all these declarations can be filed in Form 12B. So whenever you are shifting from one organization to another organization in the middle of the financial year, you should always furnish Form 12B, though it is optional, but I normally suggest to all the employees that you should always furnish Form 12B. So basically, it is a checklist which contains all the information about the employee as well as your old employer. That is about your previous employer, what was his PAN number, what was his STAN number, and so on. It contains the breakdown of the salary, that is how much basic pay you were getting, how much was the DA, HRA, leave encashment, and all these things, all these breakups. Apart from them, it also contains the provident fund contribution declaration, then rent-free accommodation if you are getting any, then what all deductions you have applied for, and what all TDS has been deducted. So most importantly, you should always declare Form 12B, as it will, the benefit of that 12B will be your new employer will come to know about the information of the earlier salary that you were drawing, so that he can accumulate the total salary, old plus new, and then he can deduct the TDS on the balance of the amount that you are supposed to pay at the end of the financial year. And on your side, you will be complying with all the legal formalities with regard to tax. Apart from Form 12B, there is also proof of investments that you need to file with your new employer. So you should file that proof also with the employer. Then your exit date should be mentioned to the employer PF portal. That will help you to draw your PF at the later stage. So if you are getting registered from registered employer to registered employer, that is, you are shifting from registered employer to registered employer, that in that case it will not affect you. But where you are transferring from unregistered employer, and then now your new employer is registered one, in that case you need to generate new UAN number, that is, fresh UAN number will be created for you. And if in case your earlier employer was the registered employer, but now your new employer is unregistered employer, so in that case, maximum after 2 years, employee has to file the withdrawal at his PF portal. That is, he himself, he has to apply for the withdrawal. That is after 2 months of leaving the prior job. So all these need to be filed. Apart from this, employee can also give a self-declaration with regard to the gratuity and leave encashment, that earlier what all gratuity and leave encashment he has received from his previous, that is exempt, if any. And especially for the employees, they should always take the pay slip from the previous employer before joining the new employer as a evidence what all their salary they were getting earlier. So these are basically few points that employee always need to know before shifting to any new employer.
Oh, thank you so much, Ruchika. I'm sure that everybody has taken their notes here, because yeah, there are a lot of questions that come to our mind when we switch our jobs, because there's a lot of documentation that goes along with it. So what all do we require in terms of our investment plans and the proofs that we submit, or the PF that is being deducted here, will that be continued, or would we want to lower the range and all? So that's a lot that we need to look into, and I'm sure this would help. I'll move on to my next question, which is, we keep hearing about these new latest laws or amendments that keeps happening. So how can we ensure that our investment proofs align with the latest tax laws and regulations which are there to maximum tax? benefits?
So, Ragi, this is something that is a proactive approach rather than reactive approach. So you should always be on your toes with regard to your taxes. You must be aware of what will be the tax structure for the current financial year and where you can invest. What are the new investment policies that government has declared where you can invest and you can get the maximum tax benefit. This each and every employee should be aware of, and thanks to portal like you are organizing these webinars, they are also very helpful for the employees, that they come to know what are the latest tax structures, what are the latest investments plan where they can invest and get the tax benefits. So apart from this, what I believe is that regularly they should be updated regarding the tax laws, which is very crucial. How they can be updated? So they can monitor to the official announcements that are being given by the income tax department. Normally, nowadays, we are getting WhatsApp call from the income tax department of the latest updates. So we can be aware from that. Apart from that, we can also subscribe to the financial newspapers, news updates, or we can consult to some professionals or financial advisors who can advise us regarding these investments, where we can make the investments and get the maximum tax benefits. We can also review our annual portfolio, that is with regard to the effective strategy, where we can invest and how we can invest. Apart from this, we all know that budget is normally declared on every 28th of the February. So at least at that time, we should be aware of, we should be updated regarding what is the new tax or what is the new investment or what is the new policy that government has introduced with regard to the tax structure or with regard to the investments that can be done. And not this at all, but you also have a HR team in your office. So anytime you can approach to your HR team and you can ask about the new tax, your latest investment proofs, that how they can be done and where you can invest so that you can get the maximum tax benefits.
Sure.
So I think this is more of proactive approach rather than reactive approach that the employee should always follow.
Definitely. Okay, so taking reference to that, are there any lesser known or frequently overlooked tax saving investments that we should consider, and what are the proofs that are needed for them?
Look, as I told in the first question only, that there is a long list under section 80C where we can invest and we can get the tax benefit. So normally people are aware of very few investments, and normally they go for those investments only. But apart from those commonly known investments, there are many or many other areas which we can explore and get the tax benefit. To discuss few, like tuition fees, though this is some of you must be aware of, like if we are paying any tuition fees for the children, provided it is a full-time education with any university, college, or any other education institute in India, so parents will get the deduction. But if you are paying any development fees, if you are paying any donation or charity to the education institute, or you are paying any private coaching fees, or you are also bearing any hostel expenses, mess charges, or library charges, any other similar charges, then you will not get the deduction here as a tuition fees. So if parents are paying any tuition fees for the children, they can claim the deduction under section 80C. Again, the threshold limit will be rupees 1,50,000. This is available for 2 children. And when you talk about the proof, then in that case, we need to maintain a copy of tuition fees that we have received. Normally, we get fee slip from the school or education institute, and you check, it's written there in between somewhere that tuition fees. So we will get the deduction for that tuition fees only, not for the entire fees. Then when you are talking about lesser known tax benefits, we are all aware of medical insurance. So if you are doing any health insurance, we all know that we are going to get the deduction. But what if I forgot to do any health insurance for my senior citizen parent? Then still you don't have to worry about it. If you have done any medical expenses, or you have incurred any medical expenses for your parents who are senior citizen, but you forgot to get health insurance for them, or you have not done any health insurance for them, but still you can get the benefit of rupees 50,000 per year for the medical expenses that you have incurred for your parents. For example, if I have paid rupees 60,000 as a medical expense for my parents who are senior citizens, but I have not taken any health insurance policy for them, but still in this case, I can claim a deduction of rupees 50,000, that too under section 80D only. This we must be aware of. Then with regard to the house tax, as we all are aware of rent-free house rent allowance or rent-free accommodation, that employer is giving you house rent allowance or rent-free accommodation, and we are getting that deduction under section 10. What if I'm not getting any house rent allowance, but I'm paying any rent? So this deduction that is under section 80GG is available for all those employees or all those individuals if you do not own any house property, or no house property is in the name of your spouse or in the name of minor child or in the name of HUF to which you belong. Then in that case, you can claim the deduction of section 80GG, provided you are paying any rent. So if in case you are paying any rent, then you can claim a deduction of rupees 5,000 per month under section 80GG, even though you are not getting HRS. So in total, you will get a deduction of rupees 60,000 for the entire year. Again, as I said, the condition here is you are not getting HRA and you are paying rent and you do not own any property. Similarly, as I said about the medical expenses, so if you are doing any medical expenses for any dependent relative, then also you can claim that deduction. So repeating again, when I talk, if you have any physically dependent relative, if you are incurring any medical expenses for that dependent relative, one thing, or if you have contributed to any fund like LIC, UTI, if you have contributed to any fund for their benefit in future, then in that case, you will get a deduction, and this deduction amount is fixed irrespective of the expense or irrespective of the contribution that you have made. So if in case, if this handicap dependent relative has a normal disability that is up to 80%, then you get a deduction of rupees 75,000. But in case, if this handicap dependent relative has a severe disability, then in that case, you get a deduction of rupees 1,25,000. But as in proof, you need to have a certificate from the prescribed medical authority that first thing, he is disabled. Second thing, you have spent this much amount on his health treatment. In case if you have contributed to any fund, then in that case, you need to have receipt of that fund that you have contributed this much for the dependent handicapped relative. Here, I want to take example. For example, if I have any dependent relative who is physically handicapped, and I'm doing any medical expense for him, and I have incurred a medical expense of rupees 50,000. But for the deduction purpose, I will get a deduction of rupees 75,000 here, not 50,000. So this is a fixed amount for which you get the deduction. Then we have section 80DDB also. So 80DDB talks about the medical expense. Again, if you have incurred any medical expense for your relative, and this medical expenses is if they have any severe treatment, if they are going through any severe disease, if they have any severe disease and they are getting treatment for that, in that case, you can get the benefit of rupees 40,000 or amount actually paid for their medical expenses, whichever is less. So these are few deductions that you get, which are very less familiar to the people, but still, if you are incurring these expenses, still you can get the benefit under section 80 for you. And the best part is it is not only for you, but also for your relatives. So relatives are also covered. If you are incurring any such expense, you will get this benefit.
Thank you so much. This really helps a lot because there are a lot of, points that you covered, which we might not be definitely familiar with. So this helps a lot. Thank you, Ruchika. And before going to the next question, I see some comments in the Q&A section here. So as mentioned in the starting of the webinar, you can put your questions on the Q&A panel of the Zoom control, that you have there, and we will take your questions towards the end. We have a few questions already lined up that we will cover, and then we'll come to your question. I already see a lot of questions, put in by the audience. So if you also have any question, you can just put it here and we'll take that up. Okay, coming to, because we have a lot to cover, I think I'll just quickly move to the next question, which is, what are the consequences of submitting incorrect investment proofs or missing the deadline of submission?
Look, there are two different points here. First, we are submitting incorrect investment proof. Second is missing the deadline. So taking first point first, that is submission of incorrect investment proof. So let me clear this point. Recently only, after filing the returns of financial year 22-23, that is after July, many of the employees, they have got a notice from the income tax department demanding for a self-declaration, because what they have done is they have claimed higher deduction under chapter 6A, that is they have claimed higher deduction of section 80 in their ITR as compared to what all they have reported to their employer in form 16. So their form 16 was showing less deductions, but what actually they claimed in ITR was much more. So they have got the notice from the department and they were asked to verify their claim in return of income to maintain this consistency with the information that they have reported in their TDS returns. So coming back to the topic, as I have said just now, that many of the employees, they have got the notice. So one thing is this, that if in case you are submitting incorrect investments, then for sure you are going to get a notice from the income tax department asking from why this information is incorrect, or why you have filed this information when it has not been declared as an investment to your employer earlier. Similarly, apart from this, your tax liability will also increase. Obviously, if they are not going to grant this deduction to you, then it will increase your tax liability. And once your tax liability is increased, it will be increased along with interest. So you need to pay more interest. And if you see, if you have filed any incorrect proof or any submission that is wrong, then in that case, obviously your employer will be recalculating your TDS, and in that case you end up paying, he will end up paying more, deducting more TDS in that case. So this is all about if in case you are filing incorrect submissions or investment proofs to your employer or while filing your ITR. And second thing is missing your deadline. So we must be aware of this thing, that any investment that you are making has to be made within that financial year only to claim the deduction. For example, if I'm paying my life insurance premium for 22-23, which I make the investment on 1st April 23, that is after the end of 22-23, then I'm not going to get the benefit of this insurance premium paid in 22-23. For sure, I'll be getting this benefit in 23-24, but I will not get this benefit in 22-23. So in order to claim any deduction in the same previous year in which it has been incurred or to which it belongs, you have to invest in that financial year only. So you cannot miss the deadline. In case you are going to miss the deadline, you are not going to get the benefit of that deduction, but all investment you have made.
Got it. Thank you, Ruchika, for that. I'll just quickly move on to the next question, which is, when we compare salaried employees versus self-employed individuals, are there any specific considerations for either of them when it comes to investment proof submissions?
Well, first of all, we need to understand what is the difference between these two, who are the salaried employee and who are the self-employed individuals. So when I talk about the salary employee, that means where the employer-employee relationship exists and what all employer is paying to the employee. That is taxable under head salary. And when I talk about the self-employed employee, that means you don't have any employer on your head. You don't have any employer. you yourself, you are doing the business, you are running the business, and what all investments you are doing, that is not like you are not any answerable to any employer, or you are not you are not supposed to give any submissions to the anyone as we do normally in the salary class people. So basically this is the difference between employer and employee, one thing. Another thing is being a salary class employee, our TDS is always deducted under section 192B. So employer is responsible to deduct the TDS of the employees if employee has a taxable income. So after considering all the exemptions, after considering all the deductions that employee has done, he will be deducting TDS if employee has a taxable income. And at the end, employer will be issuing Form 16. In case of employee, we have provident fund. In case of self-employed persons, we do not have provident fund. If he himself is investing in PPF, that is a separate thing, but employee provident fund comes into the scene only in case of salaried employees. And when we talk about the self-employed individual, so as I said, self-employed individual is the employer himself. So he himself, he has to do all the declarations, one thing. Second thing is his TDS is not under section 192B, but whosoever is giving him income, he will be deducting TDS on that income depending upon what type of income it is. Assessee himself can also deposit advance tax provided his tax liability is more than rupees 10,000 for the entire year. Similarly, the self-employed individual, he can claim the deductions for the business related expenses, what all he will be incurring, for example, office rent, utility or depreciation, anything like that. So basically there is an organizational structure difference between the self-employed and salaried employee. Salaried employee, as I said, will where the employer-employee relationship exists, and self-employed, in case of self-employed person, each and every income will be taxable under head profit and gains from business and profession, not under the head salary.
Oh, thank you, Ruchika, for that. I'll move on to just one more question from our end because I see a lot of questions already lined up from the audience. So we'll take that up after that. So the last question that I had from my end was, what are the implications of claiming tax deductions for investments made jointly with the spouse or any other family members? And how should this be documented?
Look, first thing is, like, if a husband is making any investment and the threshold limit exceeds 1,50,000, then he can make that investment, but he will be getting tax benefit of rupees 1,50,000 only. This we should always consider in mind before making investments. So what we can do is, for the balance investments, spouse can make that balance investment, or it can be done in the joint name so that wife can claim those deductions. As we have seen under section 80 only, there are many investments, and there are many sections where we can do the expense for other person also, that is other family members also, but still we can claim the deduction. If both of them, they are doing any joint contribution to any investment, then based on the ownership share of the investment, they can claim the deduction proportionately. Let me give you an example. For example, if husband and wife, both of them, they have purchased a property that is in joint name, and they have taken home loan for that. So what all principal amount they will be paying from their account, for that they will get a deduction under their relevant ITRs. One thing. Apart from this, what all interest they will be bearing, similarly on the same lines, they will be getting the benefit of that interest under section 24 in their respective ITRs. So what all investment, any joint investment that the family that they are doing, they will get the proportionate benefit for all those benefits. So when we talk about the documentation part, what we need to maintain, so we should always maintain the joint ownership documents. As I said, if you have purchased a house property, so that will be in joint name. So the registry should be in joint name in that case. So declaration in case of co-ownership is there. So if we are paying loan, housing loans, then there should be a separate certificates for loan repayment of both husband and wife. Similarly, their contribution proof should be separate, mentioning the name of the person who has made that contribution, or if in case they have jointly made, then it will be in both cases, and 50% deduction will be available to both of them.
Sure. Thank you so much, Ruchika. This really helps. Now, I think we can move to the audience questions because we have some 15 to 20 minutes with us, and there are a lot of questions lined up already. So we'll take one by one. The first question is from Swati Joshi. Will SIP be considered for tax benefits?
Look, Swati, there are certain benefits under Section 80. If first time you are an investor, then you can get the deduction under Section 80. So you need to check if you are investing as per that, then yes, you will get the deduction.
Sure. I hope that answers the question. Moving on to the next one from Someswara Rao. Hi, Ruchika. Can employees switch IT declaration from new regime to old regime?
Yes, you can shift. For if you are showing only salary as a income, you are not showing PGBP as your income. In that case, you can switch to old to new or new to old. You can do that.
Oh. The next question is from an attendee asking, interest received on FD will be taxable or not?
Yes, interest received from FD will be taxable. It is taxable under head income from other sources. It is taxable.
Noted. Next question is from Neha. If you could please explain NPS again.
Look, as I said, NPS is the only investment where you get a maximum threshold limit, that is rupees 2 lakh deductions. So there are basically two sections under NPS. So under 80 CCD 1, you can get a deduction of 1,50,000, which is maximum to the extent of 10% of salary. But under 80 CCD 1B, you can get the deduction additional benefit of rupees 50,000. So in total NPS, you can invest and you can get a deduction of rupees 2 lakhs.
Noted. I hope that answers the question. Moving on to the next one from Hiril. If you could talk about FD again. I think you touched upon this in your first question. So.
Yes. Look, if you want to claim a deduction under Section 80C, you have an option for opening FD. This FD can be opened in scheduled bank. It can be opened in any other bank, provided you should go for tax saving FD, which matures only after 5 years. It cannot be matured before 5 years. One thing. So if you have invested in that FD in your own name, then you will get that deduction. Again, the threshold limit will remain same, that is rupees 1,50,000. If you are investing in this FD in the name of your spouse or in the name of your children, then you are not going to get this deduction. So you have to invest in your own name for this tax saving FD, then you will get the deduction.
I hope that answers the question. Moving on to the next one. This is like, if you can take this up if you want to. The question is, if an employee is getting 12 lakh per annum, what are the deductions he or she can make?
Look, as I have discussed, there are so many deductions that I have already covered. In fact, I have covered 80C, many points I have touched for 80C, 80D, 80DDB. There are so many deductions. So it depends where you want to invest and how you get. Like if you have not bought any house property on, if you have purchased any house property, but you have invested your own money, you have not taken any loan. So you cannot get the benefit of that repayment of loan or under Section 24. So it depends where you have invested.
Noted. I hope that answers the question. Next question is from Manoj. The question is, in a financial year, if an employee opted old regime in previous company and in his current company, can he opt for old or new regime? Will that option be available?
Exactly. This is what I have told just now, that if in case you have opted for old regime, then you can go for new regime, or you can still hold to old regime. It has nothing to do with your current employer or previous employer.
I hope that answers the question. Moving on to the next one from Inayat Sharif. Will fixed deposit, is fixed deposit allowed if it has taken in the name of spouse or children?
No, as I said, it has to be taken in your own name if you want to claim a deduction for fixed deposit.
Moving on to the next question from Siddhi. Can employee change his, you have already answered this question about the tax regime. Siddhi, I hope you have taken note of that. I'll move on to the next question, which is, do you have any scheme for boy children like Sukanya Yojana for girls?
I'm sorry, unfortunately, we do not have any scheme. Hope so. Maybe government will come up with that also.
Sure. Okay. There's again, I'll see the questions that we have already not discussed. So there's one question about gratuity exemption. We understand that the gratuity exemption limit is 20 lakhs. However, we want to understand this 20 lakh exemption is for per company or for the lifetime of the employee.
So if in case you have claimed the deduction of gratuity earlier, so this threshold limit will get reduced for the subsequent employers.
Okay. I hope that answers the question for you. I'll move on to next from Ramesh. In new TR, can the employee get PT benefit?
In new tax regime, employee get, I don't think he can get this tax benefit.
Okay. Hi team, whether we can allow employees to change the regime during the proof submission. Since we have already covered this as well. I will move to the next question from Jayashree. Whether Okay. Jayashree, the question that she's asking is if there is any WhatsApp finance group that, she can get in touch with for updates. So what I'll do after this webinar is done in the thank you mailer with the recording that we'll send to you, we'll also have Ruchika's email ID. So if you have any questions, if you want to personally connect with her, you can do that. So I hope that will cover that. I'll move to the next question from Ramesh again. In new tax regime, can employee get Sodexo food coupon and gift voucher exemption benefit?
So gift voucher is exempt till rupees 50,000, 5,000, and this Sodexo coupon are exempt for per meal, that is 50 per meal.
Okay. The next question is from Vivekanandu. If you can please talk about ATG or donations.
So as I have said in this webinar only, if you have invested or if you have done any donation, you should check to whosoever you are giving this donation, they should be eligible for ATG and Section 12A deduction. If in case they are eligible, that trust is eligible for that deduction, then only you are going to get this deduction of ATG. Otherwise, you are not going to get the deduction. That too, you need to check, because normally what all trust, like you are giving the donations to any trust or these charitable institutions, normally the deduction that you are getting on the donation is 50% subject to qualifying amount. This is what you get. It is not that 100%, because there are basically four you can say demarcations where you can get the deduction, either 100% without qualifying amount, 50% without qualifying amount, 100% subject to qualifying amount, and 50% subject to qualifying amount. So normally what deduction we get is 50% subject to qualifying amount. So this you need to check before making the investment, where actually you are doing the investment. Is it 100% or 50%?
I'm sure that answers the question. Moving on to the next from Siddhi. Can exemptions under ATD be allowed for in-laws, be it mother-in-law, father-in-law, other-in-laws?
As such, under Act, if you go, then it is like dependent parents. They do not write in-laws.
Okay. Okay, I will move on to the next from Nilesh. If any expenses paid for medical expenditure and later insurance is taken in the same financials, but no further treatment, can both of the expenses / premium will be claimed under Section 80D?
No, if you have claimed any medical expenditure, but simultaneously you have recovered that amount from the insurance company, then your deduction your deduction is reduced by the amount recovered.
Next question is from Achala. Can we claim interest for under construction property for ATEE and ATEEA?
So in case of ATE and ATEA, that is subject to condition. So you need to check the conditions first, because there is a threshold limit for the property also in that case.
Got it. Next question is from Swati. If the employer does not provide any medical insurance, would there be any tax benefit that could be utilized for maternity medical expenses?
If employer does not provide any medical insurance, would there be any tax benefit that could be utilized for medical? No, there is no such tax benefit for the medical maternity expenses.
Okay. Next question is from Punyasloka Mohanty. Will medical expenses incurred for dependent parents and not he or she, and if they're not covered in health insurance policy, be claimed if opted for new tax regime?
So as I have told earlier only that in case of new tax regime, you're not going to get the benefits of Section 80. So since there is no benefit of Section 80, so even if you have incurred any medical expenses, still you are not going to get the benefit.
Okay. Next question is from Vijay Bhaskar. Is rental agreement mandatory for claiming HRA regardless of rent?
Look, for HRA, normally what happens is even if you can claim HRA if you are paying rent to your spouse, but anyhow you need to avoid any legal complications in future date. Even you can pay rent to your parents, you can pay rent to your spouse, you can pay rent to your children also, to any of your relatives, provided you should have the rent agreement.
Okay. Moving on to the next question from Dhana Lakshmi. What is the proof we have to show for parents' medical expenses?
So in case of parent medical expenses, there is always a certification from the doctor who certify what are the expenses that you have incurred for these. So you need to keep that proof with you.
Okay. Next question is from Kumar. Hi, ma'am. What is the difference between tier 1 and tier 2 investments in NPS?
So as I said, like 80CCD1 and 80CCD2B, this I have explained earlier also.
I will look for the next question. I think there are a lot of questions which we might have.
Which is good or which is bad, it all depends upon what maximum tax benefit you are going to have. So maybe that old tax regime is good for one and new tax regime is good for another one. So it depends which one is good for you.
Got it. Next question is from Vijay. If the employee paid rent in cash to his parents, can we consider for HRA calculation?
Well, it lot depends upon your company policy, how they go for, but normally what I suggest is that you should pay rent by check.
Okay. Next is from Mayuri. Hi, ma'am. Can you please explain about 80EEA?
So there are a lot of deductions, like apart from this 80EEA, there are a lot many deductions. I think if I'm going to explain all of these, I don't think the time will be sufficient to cover all.
Definitely. In fact, again, I'm going to say this, reiterate it, that we'll share the email ID of Ruchika. You can always connect with her again later through LinkedIn, through meetings, etc. Depends on what's your requirement. I'm sure she would be happy to help. Okay, moving on to the next question from Manu. Normally, PF contributions cover most or complete 1.5 lakhs under Section 80D. Apart from this, what are the other exemptions available for employees?
So as I have said that the threshold limit is 1,50,000. So apart from this, but all deductions, as I have said, 80D is there, 80DDB, 80DD is there, 80GG is there. So there are so many other investments also where you can do, provided which one is available for you and where you can go for.
Got it. There's a question from Damodar. If employee has medical insurance taken through company, then separate medical bills are allowed or not?
I have said, look, if you are incurring any medical expense, but simultaneously you have medical insurance and that matures, so that benefit, that amount that have been matured from the medical insurance will reduce your deduction amount. You cannot claim both the things simultaneously. On one hand, you are getting the medical reimbursement, or the other hand, you are getting the deductions.
Okay. Next question from Vijay. Employee claim HRA and housing loan interest. Can we consider both?
Employee can claim HRA and housing loan interest. Look, when you have your house, then how can you claim HRA?
Got it.
So it is better to have a house in the name of other spouse or any other family member. This is what I can suggest.
So, okay, I'm looking for questions which are not covered. Okay, what happens if any employee salary is on hold for 3 months? Can we pay the TDS after the 3 months by paying the penalty? How is the penalty calculated?
What happens if the employee's salary is on hold for 3 months? Can we pay TDS? Yes, you can pay TDS after 3 months. Yes, but your employer, he himself, he will be deducting TDS at the time of paying this salary. And yes, interest penalty is there. That is 1.5% per month that you need to pay.
Okay, got it. Looking for more questions. I think a lot of questions are very similar. So there's another question from NK. If an employee is paying the medical insurance premium amount for his parents, the medical insurance docs has his parents' home. So can the employee submit his bank statement or credit card statement as proof of payment?
If employee is paying medical insurance premium amount for his parents, the medical insurance docs has his parents' name. So can employee submit his bank statement or credit card? Yes, he can.
Okay. Looking for more questions. Okay, there's a question. Employer deducted the tax amount but not paid to income tax department. And if there's delay in the arranging form 16 to employees, in such cases, employees are not able to file ITRs. What should be the role of employee versus employer here?
I cannot see this question.
Okay, let me
Okay, got
repeat
it.
again. It's in yes.
Employer deducted tax amount but not paid to the income tax department, and there is delay in arranging form 16 of employee. In such case, employees are not able to file ITR. What should be the role of employee versus employer? Well, I cannot comment on the role of employer as such, but yes, being an employee and being a responsible citizen, what I can suggest is that you can pay, you can file your ITR, you can pay your taxes, and then later on you will get the refund for what all TDS has been deducted and deposited by your employer.
Okay. Next question is from Ketan Joshi. If employee withdraws any FD before maturity, that will be taxable or not? If yes, in that case, where employees can claim the tax amount and benefit.
Look, if in case you have claimed deduction under section 80 on FD and you prematures that FD, then that deduction will be withdrawn and you need to pay taxes. But or in simple words, I can say you will be paying all that taxes along with interest, which you have earlier claimed as deduction.
I hope that answers the question for you. Next question is from Aarti. Home loan can be claimed for how many years?
Home loan can be paid for, can be claimed for the time till you are paying home loan.
Okay. Next question is from it's from Anthony. Can the amount be claimed if the employee has taken NPS alone without employer contribution? Please clarify.
Can amount? Yes, you can also contribute to NPS. As I said, there are two types of NPS. You can also contribute.
Okay. Looking for this question you might have touched upon before, but this is from Prajna. Food expenses and telephone reimbursements can be claimed for exemption, yes or no?
I cannot see this question. Can you scroll down?
So it's from Prajna. I'll repeat again. Food expenses and telephone reimbursement can be claimed.
Look, food expenses can be claimed. That is 50 rupees per meal. And then when you are talking about telephone bills.
Yes,
telephone
yes.
bills.
Telephone reimbursement.
Yes, mobile bill can be claimed. Mobile bill can be claimed as an expense. Reimbursement can be claimed as an exemption, provided you are showing sufficient evidence to your employer that you have paid that much expenses and it has been reimbursed. So normally what we conclude is mobiles, they are being used for office purpose only. So that reimbursement can be claimed as reduction.
Okay, next question is from Mohan. What if home loan sanctioned in a bank after leaving the current company? as I'm leaving on 15th of December and the loan will be sanctioned in January 2024.
Even if you are getting that home loan, so it has nothing to do with your company, because this is, if you are paying any repayment of, you are repaying any principal amount, then you will get that deduction. So what all idea you will be filing, you can claim that deduction for interest as well as loan repayment, irrespective of where you are working.
Next question is from Divya. The question is, if the landlord does not have PAN, what is the alternative proof for HRA that can be submitted? Will Form 3 declaration with Aadhaar of landlord suffice?
So this you need to check from your HR, because a lot more depends upon your company policy. Like many companies, they ask for PAN card, but many companies, they are they're okay with the Aadhaar card also. But I think more or less they always demand for the agreement and rent receipt that your landlord is giving it to you.
Got it. Okay, thank you so much, Ruchika. I think we took a lot of questions. That was like a rapid fire round. I was asking a question. Okay, moving on to the next one. But thank you so much for all the inputs and the insights that you shared with us. I'm sure there are a lot of questions pending we might not have covered. So what I'm going to do now is sharing an email ID with you. Please note it down right now. You can share all your pending questions to that email ID, which is info@neerajbhagat.com. It's info at neerajbhagat.com. This is right away that we can share with you. Other email that you'll receive by the end of next week will also have Ruchika's email ID, so you can always connect with her. Apart from this, as you can see on the screen, we have a Great Tribe community where we have experts like Ruchika, who you can always ask questions related to taxes, and they'll be able to guide you there. And as promised, this recording will be available to all of you. You can always go watch it there. I'm sure in the starting you might have asked one question which might have been covered in towards the end. So you can always watch it and take insights from there. And once again, thank you so much, Ruchika, for taking out the time and today. I'm sure that that was a lot to take in. I am feeling very overwhelmed with all the insights that we got today. Thank you so very much once again.
Thanks for giving this opportunity. Thank you, Rakhi, and goodbye to all of you. Thank you.
Thank you so much. And as promised, dear attendees, we'll share the recording, the email ID with you once again next week. And you can always write back to us. Thank you so much once again for joining.